Welcome to our video on understanding delayed payments after closing a home. This is a topic that's crucial for both homebuyers and sellers. Understanding delayed payments after closing a home. The National Association of Realtors estimates that approximately 16% of home purchase contracts experience delayed payments, and another 6% of contracts are delayed due to appraisal issues. Navigating through the process of buying or selling a property can be complex, and the final steps of transferring ownership are no exception. Sometimes, even after the paperwork is signed and the keys are handed over, the payment can still experience unexpected delays. In this video, we'll explore what delayed payments are, why they occur, and the common issues that can cause these frustrating holdups. We'll also delve into how these delays can impact both parties involved, and offer practical advice on how to prevent and manage these situations should they arise. By the end of our discussion, you will have a clearer understanding of the potential roadblocks in the closing process and how to navigate them effectively. Whether you're buying your first home or selling one, knowing these details will help ensure a smoother transaction. Let's get started. In the realm of real estate transactions, the term delayed payments refers to the postponement of funds being transferred from the buyer to the seller even after the official closing of the home sale. Typically, the exchange of payment for property keys signals the final step of a home purchase. However, complications can arise, leading to delays. Delayed payments can occur under various circumstances. Sometimes they are planned with agreements made in advance to accommodate the financial needs of the buyer or seller. More commonly, these delays are unintended and stem from several possible issues that disrupt the smooth progression of the transaction process. A delay can be simply due to the time it takes for banks to process large transactions. Financial institutions often need several business days to clear significant amounts of money, and this timing can be affected further by weekends and public holidays. In other cases, the delay might be linked to the escrow process where funds and ownership are in transition. Here, the holdup can be due to last-minute disputes over closing costs, necessary repairs, or discrepancies in the final inspection. Understanding these potential delays is crucial for managing expectations and planning accordingly. Both buyers and sellers should be aware of the typical timeline for their transactions and have realistic expectations about when the funds might actually be transferred. This knowledge helps in coordinating move-out dates, purchase of a new property, or financial commitments dependent on the sale proceeds. Delayed payments in real estate transactions can arise from a variety of sources, each impacting the closing process differently. Understanding these can help both buyers and sellers prepare and possibly mitigate the issues. One significant cause of delayed payments is banking delays. The transfer of large sums, like those involved in purchasing a home, can be subject to extensive security checks and processing times, which can extend beyond the expected timeline. Banks might also have specific operational hours and non-business days that can further delay the process. Escrow issues are another common culprit. The escrow service acts as a neutral third party to hold and regulate the payment of the funds required for the property transaction, ensuring that money only changes hands when all conditions of the sale are met. Problems may arise if there are disputes over final adjustments like unpaid utility bills, property taxes adjusted up to the date of closing, or discrepancies in the services or repairs agreed upon during the sale negotiations. Documentation errors often lead to delays as well. These can range from simple typographical errors to incomplete forms or missing signatures. Inaccuracies in loan documents, title deeds, or settlement statements can halt the entire process until rectified, requiring additional time to review and reprocess the necessary paperwork. Lastly, legal and compliance issues can impose delays. For example, unresolved disputes over property boundaries or existing liens against the property can prevent the closing from proceeding as scheduled. Title insurance companies need to verify that the title to the property is clear and transferable, and any issues discovered during this process can significantly delay the transaction. Delayed payments after the closing of a home sale can have significant impacts on both buyers and sellers, affecting them financially and emotionally. For sellers, the delay in receiving payment can cause financial strain, especially if they are relying on the funds from the sale to finance a new home purchase or to settle other financial obligations. The uncertainty and waiting involved can also lead to stress and frustration, as their financial planning may be contingent on the timely receipt of these funds. Buyers, on the other hand, might also face their own sets of challenges due to payment delays. If the delay is attributed to their failure to secure financing on time or finalize their mortgage process, it could potentially result in additional costs such as penalty fees or increased interest rates. Additionally, buyers may find themselves in a difficult position if they have already made arrangements based on the assumption of a specific move-in date, such as giving notice on a rental property or coordinating movers. Moreover, both parties may encounter logistical complications. For example, delays could disrupt subsequent property transactions lined up after the initial closing. In a chain of property sales where several transactions depend on the completion of preceding sales, one delay can impact multiple parties. To prevent and manage delayed payments in real estate transactions, several measures can be put in place to ensure a smoother closing process. Clear communication stands as one of the most critical strategies. Ensuring that all parties involved, the buyers, sellers, real estate agents, lenders, and lawyers, are on the same page can help avoid misunderstandings and provide timely updates if any issues arise. Effective communication tools and regular check-ins can help manage expectations and keep the transaction moving forward. Another important preventive measure is adhering to best practices for documentation. This involves preparing all necessary documents well in advance of the closing date and ensuring they are complete, accurate, and thoroughly reviewed. Buyers and sellers should work closely with their real estate agents and lawyers to compile a checklist of all required documentation for the transaction, such as loan documents, title deeds, and settlement statements. Paying close attention to detail in these documents can prevent the common delays that stem from paperwork errors. Consulting professionals is also a key step in navigating the complexities of real estate transactions. Real estate attorneys can provide valuable advice on legal matters related to the transaction, such as title searches and resolving liens or disputes that might impede the sale. Mortgage brokers and financial advisors can assist buyers in securing financing and ensuring that all financial requirements are met ahead of schedule to avoid last-minute hitches. Real estate agents often recount stories where open and proactive communication has helped preempt potential delays. For instance, an agent might share a scenario where early detection of an error in the loan documentation allowed the parties to rectify the mistake well before the closing date, thereby preventing a delay. These anecdotes underscore the importance of thoroughness and vigilance throughout the transaction process. Moreover, interviews with mortgage brokers can reveal common financial pitfalls that lead to delays. A broker might explain the importance of buyers securing their mortgage approval early in the home buying process and ensuring that their financial status does not change significantly before closing, as such changes can derail the final approval. Legal experts, such as real estate attorneys, can provide deeper insights into how unresolved liens or disputes over property boundaries can cause delays. They can offer advice on conducting thorough title searches and ensuring all legal aspects of the transaction are clear from the outset. This guidance is invaluable in illustrating how legal preparedness can prevent payment delays. Expert tips also often highlight the importance of having contingency plans. Professionals may suggest setting realistic timelines and having buffer periods to manage unforeseen delays effectively. This strategic planning can be particularly beneficial in multi-link transactions, where a single delay can affect multiple parties. By incorporating these real-life examples and expert advice, viewers can better understand the dynamics at play in delayed real estate payments and learn how to effectively anticipate and address them. This section not only informs but also empowers buyers and sellers with actionable strategies to ensure smoother real estate transactions. The following are detailed strategies and best practices that realtors often recommend to both buyers and sellers to prevent and manage delayed payments in real estate transactions. Real estate agents stress the importance of keeping all lines of communication open among the parties involved. Regular updates and meetings can help identify and resolve issues early. For instance, agents may suggest scheduling weekly calls with the buyer, seller, and their respective lawyers and lenders to ensure everyone is on the same page and any potential issues are discussed promptly. Realtors often advise buyers to thoroughly understand their financing options and the timeline required for securing a mortgage. It's crucial for buyers to maintain their financial stability during the buying process, as changes in credit score or employment status can affect loan approval. Realtors may recommend that buyers avoid making large purchases or changing jobs during the home buying process. Agents recommend that both buyers and sellers engage in early and thorough inspections of the property. Identifying and agreeing on any necessary repairs early can prevent disputes near closing, which often delay transactions. Sellers are advised to disclose all known issues with the property upfront, and buyers are encouraged to complete all desired inspections and agree on resolutions well before the closing date. Realtors emphasize the need for having clear legal and title documentation. They often work closely with title companies to ensure that there are no existing liens, disputes, or boundary issues with the property. They may suggest purchasing title insurance to protect against unforeseen claims that could arise after the purchase and delay the transaction. Experienced real estate professionals understand that not all delays can be prevented. Therefore, they often advise clients to plan for contingencies in their personal and financial arrangements. This might include flexible moving plans or temporary housing arrangements in case the closing is delayed. Financially, sellers might be advised to have a cushion in case the payment is delayed, so they don't find themselves in a bind if they need to cover immediate expenses. To minimize the risk of delays due to documentation errors, realtors often work with buyers, sellers, and legal professionals to double-check all paperwork for accuracy and completeness. This includes ensuring that all conditions of the sale have been met, all necessary signatures are in place, and the terms of the mortgage and transfer of ownership are correctly stated.